price action is always trying to fool you. It's always trying to confuse you. It's always trying to take advantage of your emotions, your fear, your greed, everything. With system trading, all your emotions go out the window because everything's backed by numbers.
Like, what did you find that made you decide that,
Well,
shorting's better?
I found a statistical edge on paper. I found that, like, for example, large percent gappers on the day have about an 80% chance, 79 maybe, of closing below the open price on the day. So therefore, I already have a directional edge of where that stock wants to go that day, and the directional edge is it wants to go below the open.
A lot of traders, they view this systematic trading as like a holy grail that will change their trading or propel them from losing money to becoming profitable overnight. But clearly, there's a lot of work involved.
Yes, all the work comes out outside market hours, and there's a ton of work. You're going through so much data. Be shocked how many times just simple little small errors changed everything in our equation. It's been amazing. I can't express it enough. Algorithm trading, I barely have any much effort now. I don't even have to look. The algorithm takes care of everything. It locates the shares, shorts the stock for me, gets me out, exits. It's like I can just do anything, and I have my robot knowing that it's gonna trade for me, and it sends me notifications when things happen.
You probably have this perception of day traders, how they must wake up early every single day and they're glued to the monitors for 10 hours a day, staring at charts. Well, that couldn't be further from the truth, especially judging from the systematic trader that we are chatting with today. Evan Schunk is a systematic trader who achieved what most traders cannot, allowing algorithms he developed to completely take over almost all the steps of the trading process, from stock selection to taking entries, profit, and stopping out. But of course, he didn't get here overnight. In today's conversation with Evan, you're going to learn how his systematic trading approach helped Evan to finally find consistency and reach the first million profit goal. The pros and cons of systematic trading. It's not the end-all be-all for trading, but it certainly can help. Evan's step-by-step process of tracking data, finding patterns, and extracting various strategy executions from thousands of sample size, and how you can do the same too. I love learning more about systematic trader, especially having interviewed a few very successful systematic traders before, such as Chris Verma and Stephen Dux. So I personally am very excited for today's unique conversation. So make sure to drop a like down below and get ready for today's mind-blowing interview with Evan Schunk. Welcome to the show, Evan.
Hey, it's great to have me. It's very nice to meet you finally. I've seen you on YouTube a bit. I have.
Yeah, I'm really excited for our conversation today. I want to say these podcasts are just my really selfish way of trying to meet different traders with different styles. And today I'm really excited because I think you're the third or the second systematic trader that we have on the podcast. And whenever, systematic traders show up, I feel like my brain explodes because, I'm more discretionary, but I'm always trying to learn how to be more disciplined and systematic like you guys. So without further ado,
yes.
How would you describe what kind of trader you are, and how are you different from traders who generally trade more discretionary style?
Well, I'm a systematic trader. So what I do is I look for edges in the market through data. Everything I do, I pull it on Polygon. I even use Spike Eat. But I'm using historical market data to define my entries and exits that give me a statistical edge. That is essentially my entire strategy. So all the work comes outside market hours. All my entries and exits are predefined based off data and the statistical edges that you can find in them. And that is exactly how I trade.
Have you always been a systematic trader, or in the beginning stages when you first found out about trading, what was your style of trading like?
Yeah, I was more of a discretionary trader when you start. I feel like most people are discretionary when you start.
Yeah.
And it's hard. I think I was trading for about a year and a half straight. Or actually, was trading for 2 years and didn't really make any money until I switched more to a systematic approach. Discretionary trading, it's It's really difficult. The people that get successful out of it are really good at it, but I didn't find as much success with discretionary trading than I did systematic trading.
Okay. And what do you think is the main difference between, let's say, someone who trades more discretionary versus systematic?
Defined entries and exits based off specific criteria that you put on the stock, and you stick. And if that criteria is hit, your entries are there no matter what. And then you place your exits right after your entries. Discretionary pro, it has more of a feel on the market. They have more of a pulse on the market. They more have they can change their mind at whim, just depending on how they look at the price action. For systematic trading, everything's defined by numbers, and there's a line for everything. Everything is quantified.
So that sounds like no level 2, no price action, no reading candlesticks.
Price action, no. Price action is, in my opinion, as a system trader, it's such a lie. Not a lie in a sense that it does work, but a lie in a sense that the price action is always trying to fool you. It's always trying to confuse you. It's always trying to take advantage of your emotions, your fear, your greed, everything. With system trading, all your emotions go out the window because everything's backed by numbers.
Oh, I see. I can see why that would be appealing for a lot of, especially newer traders.
Because you get very emotional in the price action. Like there's a stuff, then a swipe, and then it's back up, and the price action gets crazy. So I find, having a data backing up your entries and exits gives me a lot of comfort.
Before discovering systematic trading, and you were just learning and being more discretionary and trading a lot of different strategies, you learned online.
Yes.
How was the first couple of years? Like how much money did you lose?
I lost maybe $10,000 to $12,000 in my first 2 years.
Okay.
Consistently, just slowly, just a slow bleed.
Yeah.
Just discretionary trading. Sometimes I'd hit some. Most of the times I'd lose. And it was just really hard, and I wanted to see my what I started doing is I started tracking data.
I see.
I just started tracking big gappers, all the price data, open, high, low, close, the float, market cap, lots of variables, any variable I could think of. I actually tracked it all by hand on pen and paper. The whole thing. I had so much papers, it's crazy. Yeah.
Is this before Excel existed?
No,
or?
I wasn't a computer guy.
Oh, okay.
It wasn't until my brother finally joined me in 2020. He's just like, dude, are you kidding me? What are you doing with all these papers? Like, get on Excel. And he's more of a computer guy.
Oh, okay.
Anyways, I lost about 10, 12K. I was trying panic dip buys. I wasn't even at like a short selling broker, so I was doing all longs. And I'm like, all right, longs aren't working out. Yeah. And then I started getting into more watching Tim Grittani and Stephen Dux after that. And I started listening to the more data approach and how they're tracking data. So I got the gist of how to just basic track data and patterns from them. And then that's what opened the door, and I just kept growing from there.
Oh, so Tim Grittani and Stephen Dux were kind of like your, would you call it, like mentor figures?
Yeah.
To start tracking.
Grittani the biggest, because I was in the Tim Sykes room. I learned a lot from Sykes, but then I feel like I really related with Grittani's approach.
Okay. I found it interesting that you said before you were systematic, you were all long biased, trading long strategies.
Right.
What changed?
I lost too much money.
Okay.
And I had to switch something up, and I had to find an approach that made sense to me. Maybe I could have stuck with longing, and maybe it would have turned out well one day. But I found what worked for me. Learn a variety of different styles from different traders, because there's so many different ways to make money in the market.
Yeah, for sure.
And then I chose the style that resonated with me the most.
Yeah, but I was trying to say is you dove deep into data and tracking.
Yeah.
Is it because, what did you find that made you decide that, shorting's better?
I found a statistical edge on paper.
I see.
I found that, for example, large percent gappers on the day have about an 80% chance, 79 maybe, it varies per year, of closing below the open price on the day. So therefore, I already have a directional edge of where that stock wants to go that day. And the directional edge is it wants to go below the open.
Oh, I see.
So therefore, I would want to be short that day.
Interesting. Is that the kind of the big picture you found back in 2019?
Yes. Started looking at more big picture data, statistical moves backed by data. Yeah.
And when you're tracking these data, can you explain to our viewers What is this data and what's in there and what specifically are you tracking?
So it's just a historical market data. You can get it on SpikeEat, you can get it on Polygon. I use Polygon, but Polygon's not so user friendly. You got to know how to code to get the data out of there. And what you're tracking is just everything you could think of, all the price data, open, high, low, close, the time that it makes a high a day. Timing matters. The market cap, the float, these things might change the winning percentage of how often they close below the open. And maybe there's some resistance involved. Track that. If it's some really news, it's usually pretty irrelevant, but sometimes there are some news pieces that can be important. Track that. Track everything you think of and see what variables are changing the statistical big picture moves. And obviously you want the variables that are making it go down the most, the price go down. So
usually from, let's say you extracted all those different data points, how many samples do you actually look at and back to how many years?
Right. So back in the day, we used to only have maybe we started with maybe 200 samples, maybe sometimes 250, 150, 300 before but now we are dealing with thousands of samples. So it's very robust and I trust it much more. But you can, I personally, I would say if I don't have a minimum of 300 samples, I'd feel pretty uncomfortable. That's just me. But I know some people that do less than that and they're okay. But now I'm dealing with thousands of samples for each pattern. So my confidence in the patterns, the more samples, the more robust it is, the more confident I am in it.
Yeah, that makes sense. If it's only a couple hundred, I feel like that can be 6 months.
Right, because the market can change on a dime.
The
data can change on a dime, the market, and all of a sudden that pattern fell apart. That happened to me in 2022.
Okay.
I think I was overfitting, using small sample sizes, and then I found this new pattern. We thought, it looked great on data. It's worked for the past 10 years. I'm like, it should continue to work. We have time on our side. This is amazing. Okay. But there was only 200 samples.
From the past 10 years?
Yes. Right. And so and then so we were like, this is gold. Let's go in heavy on it. First play, we take 3 just nonstop massive losses. And we were just like, if the pattern just stopped working the day we did it, I think we overfitted. We had bad analysis, not a robust sample size. I think that's what hit me the most. And that's why I had such a bad year in 2022, partly why.
So thank you for sharing at a high level what kind of your big picture strategy is. Is that what you described earlier? That's what you're currently trading, right?
Yes, that is my current strategy.
Okay. And how many strategies are you currently trading at the moment that are all back tested by data?
Yeah, we got 1, 2, 3, 4, 5, 6.
Oh, wow, 6.
Yes.
Oh, that's plenty.
Yeah.
Okay, and you have thousands of data for each of the strategies.
One, we have thousands. One, we have about 1,300.
Okay.
One, we got about 900. And then one, we got about maybe 800, 700.
Okay.
Yeah.
Yeah, and are these strategies all on the short side?
Yes.
I find it interesting that most of the systematic traders that we've interviewed before, Chris Verma being one of them, and Mike Huddy as well, he's also pretty systematic. Everyone's kind of leaning towards the short side.
I think, well, probably because there's a real statistical edge in the short side. But there's a lot of danger in the short side, so it's not for everybody because it only takes one trade, and you could lose your entire account if you don't have the discipline to cut your risk, know what you're doing. If you deer frozen in the headlights, it's squeezing on you. So if you don't manage these things well, your career could be over. So I'd say it's much more dangerous to be a short seller. But I think you have more of a statistical edge for sure.
Yeah, is there a reason that you're all focusing on short selling small caps? And are you also, the second question would be, does that mean there's not a lot of edge backed by data for the mid caps and large caps from your findings?
Not the edges we look for. I'm sure there are edges in there, but it does not operate under the same rules as small caps.
What do you mean by that?
I've looked, if you look at large gap percentages for big caps, they don't have the same statistical edge. So already off the back, it's different just on that one strategy in and of itself. It's hard finding. I can't find much edges in the large cap market, but I think I'm approaching it the wrong way. I don't think I can approach it the same way as small caps.
Oh, interesting.
Yeah.
Can you describe to our viewers, kind of break down your process? Because you talked about you use Excel or you use some paper before, you use Spiky. What's the process of, and all the tools that are involved for someone to, if they really want to start becoming more systematic like you guys, what's the process and what are the steps they should take to kind of analyze maybe their existing strategies and make it a little bit more bulletproof, a little bit more backed by data? What should they do? How should they approach to be more systematic and less discretionary?
Well, you just track your pattern, everything about it. For example, you could just start with tracking large gap up percentages and just see how frequently the odds and statistical percentage that they close below the open. Okay. Take a look. You could start there. It's just a little open window of how to look. If you're a long bias trader, there's actually not really good. I haven't found any good data for a long bias trader. If there was, I'd be so happy. My dream is to find a long bias pattern that has a statistical edge to the long side. I haven't found it. Maybe one day I'll get lucky and stumble upon something. But for long bias traders, more discretionary, systematic approach is track all your trades, everything, every single trade, track it exactly what you did. And what's not working, take that out. And always stick to your risk levels, just have a more discipline and respecting your risk. It's like a huge rule for me. So
yeah. Interesting. So let's say they do track all their trades. They have, what you mentioned, the open, the gap percentage, I guess where the stock ends up at the end of the day.
Yeah.
What's the
spike
percentage change?
Yeah, everything.
Yeah, so they have all of that. How do they go in and find, let's say, they have a bigger picture now. How do they go in and find out where they can define their entries and exits?
Test different entries and exits. Experiment. Try the open. Try it on 20% spikes. Try on 30% spikes. Try on 10% spikes.
I see.
Just try everything. Just trial and error.
Yeah. Yeah. And I guess they can do all that. Do
correlate
they do it on live?
Yeah, you can correlate moving averages. Like if it breaks certain moving average, you can correlate whatever you want. Any of those indicators in the market. Yeah.
Okay. So I guess the message here is just to keep trying and testing.
Keep coming up with ideas.
Yeah.
If you observe it live, once you observe something enough, you'll be like, I keep seeing this thing happen over and over. I'm going to try and see if that's a good entry. I'll test it,
I see.
It's trial and error.
Yeah. I think a lot of traders, they view this systematic trading as like a holy grail that will change their trading or propel them from losing money to becoming profitable overnight. But clearly, there's a lot of work involved, right?
Yeah. Yes, all the work comes out outside market hours, and there's a ton of work. You're going through so much data. It's very easy to make mistakes. Me and my brother have a good checks and balances. We always check all our work. You'd be shocked how many times just simple little small errors changed everything in our equations. And so we check and balances all our work. So that's really good. And I encourage others to get in teams to find edges as well. Share edges, things that you find, a small niche team. It's good to have those.
Yeah.
Yeah.
You mentioned your brother. Is this the brother who first introduced you to Excel in 2021?
Yeah, he's the one that first introduced me to Excel in 2020.
Okay.
Yeah, he saw me. So I started tracking data 2019.
Okay.
And I tracked it for a whole year on pen and paper, everything. All those variables, I did all of it, pen and paper.
Yeah.
And my brother finally comes in 2020, one, because I finally told him, look, I finally started getting profitable. But I was on more of a hybrid approach, half system, half discretion when I started getting profitable.
Okay.
And I was like, come in, I'm ready to teach you. I also built a system. I got all this stuff, and he came in. And he also just lost his job that year because it was COVID 2020.
Yeah.
So it was great timing. Everything just lined up. He's like, all right, come in. I remember his very first trade, I told him short here at the close, wait until tomorrow morning, cover at the open. And it was like my overnight short pattern at the time.
I see.
And it was his first trade, and he made like $1,200. And he was just like,
God.
what? Is this really? Like, he's like, all right, I'm all in. Let's go. So he tried following me, all my trades, the discretion part, and he couldn't stand it. because I was doing a lot of discretion and half system, right? And he was just going so annoyed. He's like, dude, I'm so annoyed following you. I can't stand this. And I was like, well, here's my system. Let me take a look. This is a strategy I developed this past year in 2019. I've never tested it yet, but on paper for this year, it was incredible. And he looked at it, he was like, dude, this is so good. Like, why aren't you doing this? I'm like, I don't know, I'm profitable right now. I just haven't tried it yet, but I want to. And he's like, dude, forget your discretion, forget following you. I'm doing this. And I was like, okay. So he was actually the first one to start the system that I built on paper. And then I remember the very first trade he made, it was like the second trade. He made like 4 or 5K that day on one trade. And I made maybe like 2,000 that day. I'm like, he's just going to come in here and start making more money than me, my older brother? I'm like, no, that's not happening. So we're competitive, you know?
Yeah.
And so I started doing the system as well. Right when I saw that, wait, this might be something really special.
Yeah, so that's the point where you abandoned your past discretionary
Mostly
strategies.
abandoned. I still did a little discretion. I did,
Okay.
but yes, that's when my system really began.
I remember you mentioned that in 2020 you thought is that the strategy that you thought you cracked the code of the stock market?
Yeah, we were doing such a basic strategy.
But it worked well.
And it worked so well. Like, it was so simple. And we thought, dude, we're geniuses. We cracked the code. Like, every day we were waking up. It was like, how much money are we going to make that day?
Oh my God.
It was so ridiculous. It was the craziest cycle of success for these gappers, just always dumping out of the open. And we thought we cracked the code. We were making a ton. And then 2022, all the patterns changed. The data changed. The market, we got wrecked. So it was a humbling experience in 2022 because data can change on a dime. The market can change, yeah. So you always got to keep up to date. You always got to be keeping track. Yeah, it's a never-ending process.
Yeah, that's what I was gonna ask. So, how do you know? Well, now it's 2024. Knowing that experience from 2022 and 2020, nowadays, how do you keep track of your data, and how do you know when to abandon a pattern altogether? Like, what do you need to see on your data tracking to tell you that?
One is looking at the historical downtrend of the pattern. Okay. So, what's the farthest the pattern has dipped? And in the bankroll is it 20% drawdown, 30% drawdown? What's the largest dip? And if I ever see a dip break its previous record of the largest drawdown it's ever had, that's a red flag, and it might make me think hold and wait approach. Let's see if it comes back up. Because if we're treading new waters right now, the drawdown's never been this bad. Who knows how much worse it can get? Let's be safe. So that would be one maybe point. Another one, if the profits overall average gain on the year, if it starts going way below the average, on I'll make a chart on Excel. That might be a cause, wait for it to get back above the average and then start again. And then there's a third approach that's good that I remember I learned from someone else, but I forget that one. So these are just ideas that I would look into if I want to stop a pattern.
So you mentioned the drawdown is below the average.
The historical,
of your trades, or the historical backtested?
Historical backtesting.
Oh, so you also, not only do you mine the data, you also kind of input some your account size to simulate the P&L.
Yes, we simulate P&L, and we'll simulate the whole historic P&L of the data, of the pattern.
Interesting, yeah. So, but that also just means if it worked in, let's say, in the last 10 years, and now it's stopping to work. So how do you then further backtest to find a new strategy? I guess that's my question, if that makes sense.
You just keep looking for different things.
You look for something completely different.
Sure.
Oh, so you abandon this whole thesis altogether.
I've abandoned a couple strategies, yeah.
Oh, I see.
Yeah. Yeah, usually if it gets that bad, sometimes I just need a tweak. Sometimes maybe certain parts of the pattern are working, and I just got to get rid of another, a part of a layer of the pattern. It really varies. It's just a case-by-case basis.
Yeah.
Yeah.
You say, when you say you're tweaking things, you just remove criteria or change your execution? So
potentially change criteria. For example, if the stock is incredibly overextended on the day, the stock's up 200% from the previous day, right? Maybe the ones that are gapping down the next day are not working, but the ones gapping up are working. So maybe I only want to play the ones that are gapping up now and not the ones gapping down.
I see.
You know, that's just a little example. There's many,
Oh, that's okay. It sounds like, going back to what I said earlier about people think, oh, once you go systematic, like you never have to do any work again. No, you have to constantly adapt.
You're constantly working.
Yeah.
Yeah, you might even arguably working more than discretionary trading. Maybe, yeah, but depends on who the discretionary trader is. Everyone works hard if you in the traders I know, discretion or system.
Yeah. I think the difference is if you're more discretionary, you rely on chart patterns or price action level 2, then you're working more during the market hours.
Yeah, you're working much more. Me,
it's different.
I'm pretty not working hard in the market hours. No, I'm just filling in entries and exits. That's it.
Oh.
Yeah, it's very effortless for system traders in the market hours.
Right.
The effort comes outside market hours.
I see. Yeah, that's very interesting. So like in a way, obviously you still need to research, backtest, keep track outside the market hours, but during the day, like right now.
Yeah, emotions. Throw the emotions out the window.
Yeah.
Stop trying to read the price action. Just stop. It's fooling you. That's our approach. Yeah.
Yeah.
I mean, so many times when I try to override my system because the price action was convincing me that no, this is not going to go your way. I think more often than not, I'm wrong. I had a good run where my discretion was beating the system, and then I just get overwhelmed when my discretion stops working and the system's beating me, and it eats me up. I'm like, all I had to do was nothing. Just follow your system, So following your rules are easier said than done. Every trader knows that. But now I'm much more of a systematic. I've kind of really tossed discretion out the window ever since we built our algorithm.
I see.
Yeah.
Yeah, let's talk about that. Because I remember earlier you mentioned that you used to be yes, you're systematically trading, but you're still manually entering all the orders and, monitoring it. So what has the transition been like, and where are you now with your current strategy and system?
It's been amazing. I can't express it enough. Algorithm trading, I barely have to do any much effort now. I don't even have to look. The algorithm takes care of everything. It locates the shares, shorts the stock for me, gets me out, exits. I still have to keep an eye open and manage it because there are bugs. We are still fixing bugs. Sometimes errors do occur, and we have to be there when that happens. But gave me so much more free time, and it's like I can just do anything, and I have my robot knowing that it's going to trade for me, and it sends me notifications when things happen. So I always have my phone, beeping about seeing what's going on, and you just got to keep track of it, but it's really awesome.
What about from the very, let's say in the morning when you're selecting trades, is that also your algo does it for you?
Yeah, the algo.
Oh, really?
Because all of our patterns are quantified with exact criteria.
I see.
So you quantify that into the algorithm, it can do anything you ask once you quantify it.
Oh, so for example, just hypothetically, you say select only trade stocks within float of 1 mil to 2 mil.
Gapping up this much.
I see.
Given exact criteria, exact quantifications for each specifics that you want it to do.
I think this is why you mentioned that news doesn't really matter because the algo cannot. Well, can it?
Well, I think it could if you're very specific on what type of news. I imagine that's possible.
Yeah.
But for my strategy, the news is 99% of the time irrelevant. 98.
I see.
Yeah.
Yeah, because you're shorting small cap.
Yeah,
gappers.
most of the news are just garbage news.
Yeah, exactly. Or like recycled.
Like there's like a 1% time that you get some real news in a small cap. That's like the viral news on like mainstream media, and it's like everywhere, and it's a small like that. That's important news. I'd track that. Might even stay away from it. Or if I see a small cap tied with like NVIDIA news and they partnered up, that terrifies. I'll probably not short that one.
So you would then, let's say you found out about it later, you would then override.
Yes, I probably would.
Okay.
If it's that serious of news where it's really real, then yeah. But that's that's like a 1% chance.
Yeah, that was what I was gonna ask next because small caps sometimes especially when you're short selling, you have these black swan events.
Yeah.
Right. So how do you make sure that you get before that or like stop the algorithm and And how do you make sure that you don't get blown up during that one event of the year?
We have our stops in always. All of our stops are hard market stops. So as soon as it hits, it markets out immediately. And all of our stops are backed by data. And so we usually, when things start to squeeze, our market orders usually get filled. Yeah, we'll have some slippage sometimes.
Yeah.
But that's just the way it goes.
Yeah, so I'm very curious. So what's the, I guess, risk reward expectancy like?
For our strategies,
yeah.
I'd say it's more of a 1-to-1.
Okay.
Yeah, you don't have high risk reward with our strategy, but you have high statistical edges, numbers backing up your strategy.
So the win rate should be a lot higher.
The
Is
win
that what you're
rate,
saying?
win rate's a lot higher.
Yeah.
Risk reward's a lot lower.
Oh, interesting.
Yeah.
Do you know why the risk reward is lower? Like what?
Because we use a wide risk. We found that wide risks are advantageous to our strategy, and we have data to back that up. So, if we're using such a wide risk, maybe we make 30% or 40% on the day, but maybe we're risking a lot higher than that. You see?
I see. Yeah. So when you are red, let's just say it's 60% loss versus when you make money, it's 30% win. But you're just just winning more.
Just winning more.
I see.
Yeah, I would say even sometimes it's not even a 1-to-1. I'd say a 1-to-2. Right? Yeah.
Yeah.
Meaning I'm risking twice as much as I might gain.
I see.
But I'd say it's in between there. It's in between 1 and 2, 1 and 1. Rarely do we make more than we risk.
And how do you decide how much you size in per strategy? Is that something you manually decided?
So I use a Kelly system for mine, which essentially the basic way to explain it. I'll choose a bankroll at the beginning of the year. So let's just say I started in the year with a 50K bankroll. Then I'll use depending on what pattern is, just for example, I'll use a 10% Kelly, meaning that I will risk, starting with a 50K bankroll, I'll risk 10% on that 50K bankroll. I'll risk 10% of my bankroll every single trade.
Okay.
So my first trade, I'm risking 10% of 50K. So I'm risking 5K on my first trade. Then let's say after that trade's over, I made 2K that day, right? So now my bankroll is 52K. So on the very next trade for the same exact pattern, I'm now risking 5.2K instead of 5K. So I'll size up more and more as I make money. And if I lose money, I'm actually sizing down.
Oh, interesting.
So that's how I compound profits. It compounds much better this way.
Yeah.
The more I make, the more I'm actually risking.
I see.
Yeah.
And is that percentage the same for all 6 of your strategies?
It varies. Some I'll do a 10%. I think the highest I do right now is 14.
Okay.
Wow,
that's really high. Yeah.
I used to go to like 20. It was crazy. Now I don't go past 15 anymore. I even try to keep around the 12 area. 12, I can manage that sort of volatility. Obviously, the higher you're risking, the more volatile your risk would be. I find that a 12% Kelly, I can handle that volatility.
Okay.
Yeah.
And I guess that also means you don't really withdraw money out.
Right.
Yeah. Or do you just keep? Yeah. Right.
Well, I do when I got expenses, but I have
Yeah.
a portion of it that is just only my bankroll that I don't wire out whatsoever. Yeah.
Okay. Do you? I guess this is discretionary. Do you ever deposit more during times where you know that's really hot for your strategies?
No, I would just no, I don't.
Okay.
Yeah. Sometimes I might do a little discretionary, like an extra percent instead of 12%, bump it to 13. How much I risk, but I rarely ever do that. Usually I just stick to it and stick throughout the whole year.
This is really fascinating for me. So does that mean, going back to the whole system trading scenario, since you've back tested like thousands of samples and you know on average how much you should make, what the win rate, what the profit should be, does that mean your system take every single trade that qualifies for the criteria?
Absolutely.
Even during times where
the market's hot? Yeah.
When the market's not hot, let's say in the summer, right? Like technically, summer months, the small caps are generally not as hot.
Sure.
You would still trade.
Oh yeah, the algorithm's still up. I turn it on every night before I go to sleep.
Oh, okay.
And then that's all I got to do, and then it just operates for me.
Yeah.
And I'm good to go usually. But we still have bugs and we have errors, so we have to watch it.
Yeah. So are you finding that just from the last couple of years of systematic trading, are there months where the small caps just generally don't favor your kind of strategies?
Absolutely. Yeah,
Okay.
we call those the drawdowns. They always come in your system. Sometimes they get nasty. When the market gets really hot, that's usually Usually when our drawdowns occur.
When the
When the market gets really hot.
Yeah.
Right? Because I'm a short seller. So
Yeah.
everything's squeezing, and that's when we usually get hit.
Okay. So then why not, since you already track those, you know which months that may be, why not just turn off your system during those months?
When the market gets really hot, it really varies. It's always random how it's going to play out, that hot sector on the day.
Yeah.
Some are more hot than others. And sometimes our system overall usually performs fairly well, decent, even when the market gets hot. So our data is backed even through the hot sectors. And we've tried to define when a hot sector comes and how that's really hard to quantify.
Yeah.
We've tried very hard quantifying what dictates a hot sector. And I just haven't fully figured that out. Maybe someone else, I don't know who has really. And there's so much variability in there that our data says do not turn it off.
Okay.
Yeah.
Yeah. I guess what you're saying is even the big drawdowns during those periods,
And
it's
sometimes the
still worth it.
drawdowns are
Yeah.
not during hot sectors. It could be totally uncorrelated too. So we don't see enough data to say it's only in hot sectors. But we do see it happen a lot during them, but we don't see enough reason to turn it off. And how to turn it off, we have to define what that hot sector is and then be able to say, okay, now it's the hot sector, so we can safely turn it off. We don't have that. Yeah, usually it's like you see 1,000% gainer. Like, for example, it just happened recently. There was 1,000% move. It felt like a hot sector's coming. Even Trump just won. The market's getting a little hot. However, our system's been working fine. So it's not always every hot sector. We just never know. So we haven't seen enough evidence to really say turn it off.
Yeah.
Yeah.
Okay. And could you share with our viewers and listeners how, for a more technical sense, like how are these systems set up? Like what platforms are you using?
Oh,
what
we use
tools?
DAS.
Okay.
And we get our market data from Polygon.
Okay.
And then we use DAS to locate shares, execute our trades.
Oh. So you you have scripts that you coded to put into DAS to
Yes.
automate these
I guess you
things?
connect the API with it. I'm not the coder.
Yeah.
So I'm not the best person to ask these questions.
Okay.
We have a 3-man team. Me and my brother do all the analysis. We do all the analysis for the data patterns, and then we have our buddy do all the coding.
Oh, okay. So that means you and your brother and maybe the third partner, if you guys all trade together, you have red days on the same days and green days, you'll all be green together.
Oh yeah, all of us. Yeah.
Like P&L will be super close then, right?
Yeah.
Oh,
Yeah, it's
okay.
me, my brother, and our buddy Calvin. Yeah.
Yeah. I
And
thought
we're-
you mentioned that you were like competitive with your brother. How are you gonna beat him this way?
At this point, we're doing so well. I guess the competitiveness has gone down a little bit.
Okay.
It has actually, which is a good thing.
Yeah.
He's also really taking off. He's been able to do a pattern this year that I wasn't doing at the early of the year. And now we're more. I guess you could say we're less competitive now.
Okay.
Yeah.
Yeah, you're more like a team working on
Yeah.
the same algorithm
Absolutely.
strategy together. Yeah. Okay. I'm just trying to think because I know a lot of people use TradeStation for
Okay.
a lot of these automated trading,
Yeah.
or even I know you can do something like this on TradingView. But it's the first time I heard someone use a DAS trader.
Oh, really? Yeah. Yeah. I use Cobra Broker.
Okay, Cobra and DAS trader.
Yeah,
That's what you use.
the DAS on Trader, right? DAS, they have it at all those brokers, Centerpoint,
Yeah.
yeah. So DAS and Cobra, yeah.
On the topic of going fully systematic,
Yeah.
like you have, relying on the platforms and your algorithm to send you notifications.
Yeah.
Are you ever worried that maybe certain entries are not taken or certain stops are
Yeah.
not placed?
Always, absolutely.
Yeah.
Yeah, the algorithm's not perfect. You got to keep an eye on it, even when you fix all the bugs, and even when we fix all the bugs and it's running really smoothly, I'm sure it'll be a lot more comfortable then. I mean, we've been building it now for 8 months, so like this is a work in progress. There's so many bugs that just keep popping up.
Yeah.
Yeah, we keep one eye open always. We got to keep track because we want to make sure we get in all the trades that our system tells us to.
Has there ever been any mistakes caused by it
Yeah.
and it cost you money?
Oh, for sure. It got me in a stock that it wasn't supposed to get to.
I see.
And then the stock, it was like a tiny float, but it misread or something, or it just got the wrong data. We're not sure what happened. I think probably Calvin knows, our guy. And we weren't supposed to get in it. It got us in, and it just kept ripping, kept
Oh,
going
God.
higher, and we just ended up taking a max, and yeah.
Okay. And these stops that you're taking, you say you have live market order stops. Are they? Do you use? No. Do you use the? I guess your strategy, your system tell you where to place stops. But do you also use a lot of traders use a max broker? No, max broker.
Oh, max brokerage.
Yeah.
No, yeah, we don't. I've never put one on. Never used that.
Okay.
Yeah.
So you are fully. Well, I guess you just said you are also monitoring the
Yeah,
stops.
you got to monitor. Yeah, and it'll send you notifications when it gets there too. But also just keeping an eye on it as well.
Yeah.
Also set up some trade alerts if it gets to certain levels on my phone.
But you're definitely not like constantly looking at your phone
Yeah, I'll
anymore.
put like price alerts. I'm not constantly looking, but I'm
Yeah.
always coming back to check in on it.
Do you have any memorable big wins or big losses from this year from your system?
I remember my worst losses in my career, for sure, or earlier in my career. Memorable big wins. I can't say that. I don't even remember the exact ticker, but the stock was a massive spike, maybe like 200%. There was a system entry on a backside for that spike, and the stock came, I think, retreated about 70 to 80% of its move.
Oh, like it went red on the day.
Almost, yeah.
I see.
It basically went back to red. And that was an amazing move. I forget the ticker that it was, but that happened. Losses, I don't know. The algorithm's doing most of the work. So
Yeah.
I'm really detached from my computer nowadays, I'd say. Yeah.
That makes sense that you don't
Yeah.
really have to know the tickers anymore.
Right. Mm-hmm.
What about any big losses as a result of the system just working but just didn't work out, or the system messing up?
So one time, which can happen, another huge reason why you got to always keep watching it, right, is because, or just keep an eye open, monitoring it, is because our stop loss canceled on us. We had like a limit stop, and it like went way past it.
Okay.
So it canceled our stop loss order, and I didn't get filled out fully. It happened on a China stock. It just
see.
went right past my stop order got canceled, and I'm still in maybe half my shares.
Oh God.
Exactly. So luckily I was there, and I immediately was getting out, maybe 10% past my stop, though 15 even. Like it was way past my stop, but I'm getting out immediately. But if I wasn't there, it would have been a lot worse. Because
Is
it
it
kept going. It kept going up.
yeah.
I forget the ticker, but I just know it was a China stock.
HKD or
Something. It was
like that.
dangerous. Yeah. But luckily I was there and then got myself out.
Oh,
So that could happen.
Yeah.
Mm-hmm.
Is it after that you decided to use market order stops?
Yeah. Well, we do both. We do both.
Yeah.
But yeah, market orders is the way to go.
Like, have you considered that since all of your strategies are kind of concentrated on small cap short selling, with short selling getting so popular nowadays, and everyone wants to short sell, the fees are definitely getting higher and higher. Like, have you considered that? Will there be a point where certain locates you just don't take anymore?
Yeah, we probably got like if the locate price is more than 10%, we probably won't borrow that.
More than 10% of the stock price.
Correct.
I see. Okay, so like, let's say a stock is $5. You wouldn't locate more than 50 cents per
Correct.
share.
That's right. That's our limit.
Yeah. Okay. Good to know. Then, do you ever worry that short selling is getting more and more crowded nowadays because it's so popular?
I don't know. I'm not too worried. Hasn't seemed to be affecting us. We always got to adapt with the market. So I'd say no. I'm not too worried. But the more short sellers, the more competitive it gets. The more people are stealing my locates. And I don't know. I haven't had too much of a problem though.
Yeah, I was discussing this with another trader. The popularity of short selling is probably what caused a lot of
these squeezes,
these huge squeezes, and why certain short strategies are no longer working.
Yeah, the data changes. I even see in one of my patterns, the average gain has gone down this year. That's a concern because it's never gotten to this low of an average gain in any other year. So it's one I'm keeping track of, and it's something you always got to keep track of. But yes, I think there's something to do with when the crowd really starts to get to an edge, and when the crowd overwhelms certain parts of the short cap edges, it might ruin the edges a little bit, possibly. But I don't know how true that is because the patterns are still working. So
Yeah.
we'll see. Yeah. And I've been saying I used to really believe in edge erosion for like a year ago. Okay. But my patterns are still working, and it's getting crowded. So I don't know if it's how worried I am about it. I guess it's we'll find out approach.
Yeah. I guess if you have to switch things up and change patterns every couple of years, it's not that bad.
It's not that bad. You just got to keep adapting, and we've had to do that. So I'm not too worried about it because even if the edge does get crowded, we will adapt. We'll find another way to attack that pattern, and we'll find what is working. Yeah.
Okay. Yeah, that goes to my next question. Since you are trading small cap stocks, do you believe that there's a max amount of liquidity or shares that you are able to take in these small caps?
Definitely. There's always going to be liquidity issues. We are not there yet. We're not massive whales. We're getting big, but that's a wait and see approach. And once we start hitting thresholds of liquidity, we'll deal with it then. Probably put a cap on how the amount we could trade, depending on the volume that day. So we'll probably filter. But as of now, we're not there yet. We're still getting in and out fine with our size, so we're okay.
Okay. And you are, just to clarify, you are trading actual equities. You're not trading options.
Correct.
Okay.
Yeah. Small cap stock only.
Yeah, because I find a lot of I don't know how true this is, but a lot of the small cap traders, once they scale up, they eventually move on to like large caps.
Yeah, I keep seeing that too. Yeah.
I don't know how true that is.
That's what I hear. Yeah. I hear that from a lot of bigger traders, but we'll see.
What are some of the current strategies or systems that at a high level that you're working on?
A large gap percentages is always something we're looking on.
Okay.
Any sort of serious extension moves, large spikes, large gap percentages. There is always some short sides edge we find in the data through things that get very extended on the day.
So that seems to be like the big picture for a lot of these short selling strategies.
Yes.
Yeah, I mean, it makes sense. Like the stock has to go up.
These are all terrible garbage companies, so they can only
yeah.
get so high before they want to start coming all the way back down.
Are you excited that now that there's starting to be rate cuts? Because that just makes it easier for these companies to borrow.
I hope so. Yeah, I hope it brings back some good, better edge in the short side. We'll see. But yeah, I hope so.
Yeah, that was a scenario in 2020.
Yeah. 2020, anomaly year for short sellers.
Yeah.
I mean, for everybody, really. I feel like every trader was making money. Every strategy was working.
So we interviewed Chris Verma here before on the podcast, maybe 2 years ago.
Okay.
And I think in the podcast, he said that most of the profitable discretionary traders that he knows are actually just systematic traders who are really systematic in the way they approach their strategies, but they just don't follow it exactly.
Yeah, more of a hybrid approach.
Yeah.
I agree with that. I think the best traders out there usually have a discretionary aspect to them and have a hybrid approach.
Yeah.
I think that's true as well. I think when you mix your discretion in there, and you're really good at that discretion part, I think it could take you to a higher level than maybe just pure system. Yeah.
Yeah, and to clarify this for our viewers, by that we just mean like having really concrete rules or criteria.
Yeah, it's tracking data. Discretionary guys, the hybrid, they're still tracking all the data. They know the statistical edges, but they're adding their own feel and pulse on the market and price action than a pure system guy would.
Yes.
And I think that could take them to a higher level, well, if you really hone in on that skill. But it's really difficult.
Yeah.
I think it's really difficult. Yeah.
Yeah, because there are certain things that it's just hard to quantify by numbers.
Absolutely.
Yeah. For example, I'm not a good person with these kind of examples because I'm not a math person.
Yeah.
But yeah, I trade mostly large cap stocks nowadays. I think some of the stuff I trade can be coded into a system, but a lot of it is based on like how I see the chart as well.
Yeah.
But I wonder if I could, also create an algorithm that just trade what I see for me.
Yeah. If you define exactly the criteria and entries and exits, and then once you define it, you can back test it.
Yeah.
And then you can see how it's worked in the past and how it's working now.
Yeah, especially I want to do more swing trading approach going to, I am already swing trading a lot more than day trading. So I just want to be able to capitalize on that aspect a lot more. You know, obviously you've come a long way from when you first started in 2018.
Yeah.
What is your daily routine like nowadays? Now that you have a bot who trade for you, like how much time, just so our audience know, realistically, how much time are you spending on trading and also outside of the market hours?
Yeah, I'll wake up early. I'll check, I'll look at the pre-market. I'm looking at market hours. I'm trading at all parts of the market hours. I'll be in the after hours. I'm everywhere. So I'll wake up real early. And really I'm kind of resting in my bed in the early parts of the trading, and the algorithm's working. I have it on loud. So if it will announce anytime it gets into a trade. And so anytime I hear an announcement, I'm up there watching, making sure everything's working good to go. And then I'll probably usually be pretty done around 11 a.m. Eastern.
Okay.
I just, it's really the first hour and a half where all the most activity that I find comes in.
Yeah.
And then midday, there's just usually not much going on. It's just I'm usually in my position, and we're seeing how it works out. I got my bot put stop orders in. Probably just go to the gym at that point, make a nice lunch, do some other activities, and I usually, pretty free. I got a lot of free time.
Wait, what happened to the work you do outside of market hours?
Yes, but we've done so much data work that it's more of like because we've done so much that it's really we got to keep up to it maybe once every week or two, do like a full on another update. But it's not like I don't have to be every day type of thing. Not anymore. Okay. Yeah, we have a bot now because now all of our data, we don't have to do it. Everything's pulled automatically. So everything's tracked automatically. We just have to pull it now. So there's not much manual labor anymore. It just comes down to when we need to check on a pattern, maybe, once a month, once every 2 weeks. Then that's when the work, and that takes hours.
Yeah.
That takes hours of work. But other than that, when that's not happening, I got a lot of free time. And I've been traveling a lot, and it's been really good. Yeah. But our coder guy, can't say the same thing for him. He's got a lot more work coding, because he's got to do the actual coding and building and the foundation. And me and my brother, what we're good at is the data and the analysis. But we have our patterns down right now, so we just have to keep up to date with them. But it's not an everyday thing.
Yeah. And also, how many hours of work would you say for you to, like, in the early stages of, before you even have a pattern, how much hours of research did you guys put in to collect all those thousands of sample sizes and to compile that into one strategy? How much time did that take?
Days.
Roughly.
Days.
Yeah.
Days. Yeah, days.
Okay.
Yeah.
Yeah, and that's involving 3 people too.
3 people, and then me checking my brother's work or him checking my work. It takes days. I remember that pattern probably took a couple weeks. Yeah.
Yeah. Okay, that makes sense. So just so our viewers are clear, it's not something you can do overnight. A lot of these work is still involved.
Yeah, absolutely.
Yeah. To close off, do you have any tips for either beginner traders or discretionary traders who are struggling? Like, what if they really want to become more, maybe not full on systematic like you, but they want to be more disciplined and have more set criteria? Where should they start?
I think you should start with tracking data.
Okay.
Tracking the patterns that you're looking at. Every variable you can, open, high, low, close, high in the day, low on the day, market cap, float, any variables, the moving averages, whatever you want.
Yeah.
I think looking at all that stuff and having it on paper and trying to see your statistical edges on paper so you can have a visual of it and have data giving you the confidence that this worked in the past, it could work now, I think is something would be good for anybody.
And if you were to start another small account today, I know you shouldn't, but if you were to do it, let's say a $5,000 account, how would you approach it differently now, knowing what you know?
How would I approach it differently? I guess I'd approach it the same.
Yeah, so you just plug in your system, have your system trade the $5,000 account.
Right, but I would probably only choose one single pattern because I can only have 3 trades a week.
Oh, yeah.
So I'd lose out on all the other patterns.
Yeah.
But I would choose the best one. And then I would just keep working that. Yeah.
Yeah, that brings me to another question. How come? Because I know you have 6, but you know which ones work best. Why don't you just stick with let's say, the top 3?
We like diversify. We want to diversify our entries.
Okay.
We don't want all of our bullets on one entry. It will create a lot less volatility when you diversify your entries.
Yeah.
And it will, in the end, the market goes in cycles. This entry is working real well right now, but that one could stop working these next months, and the other ones are working well. See what I mean? So having a diversified entry approach and not putting all in on one entry, I think is a very wise approach.
And what kind of challenges or what kind of issues are you working on right now for your systems?
Right now, it's really just the bot. It's just having errors. We're having locate issues.
I see.
Stuff like that.
Yeah. So it's more like technicals.
Technicals. Yeah, sure.
Yeah.
Mm-hmm.
What have you thought about for next year? Do you have any goals for yourself or trading goals, things outside of trading?
Yeah, I want to make $1 million a year.
Okay.
That's my goal.
Yeah?
Yeah, I want to have a mill year. Yeah.
Okay, with your current trading systems.
Yes.
You run the numbers, you did all the calculations and backtesting. Is that possible?
Oh yeah,
with your
absolutely. My
systems?
brother is already over $1 million the year. I think I'm at about 530.
Okay.
So yeah, it's definitely possible.
Okay.
It's my brother already did it. So
Yeah.
yeah.
Amazing. Where can people follow you if they want to find you on social media?
Oh, follow me on Twitter at eSchunk8. I usually post a lot of stuff. You can find some helpful things. If you're interested about data, just do a advanced search with the keyword data.
Okay.
Yeah.
Sounds good. And we got to have your brother on the show next.
Yeah.
Like, I know he's...
He'd love to come on.
Yeah. Okay, that's coming up next. Thank you, Evan.
Great. Thank you so much. It was great to meet you.
So what do you think? After hearing so much about Evan's story and his systematic trading approach, are you tempted to adapt your current discretionary trading strategies to more systematic and hands-off? We've also interviewed previous systematic traders on this podcast before, so if you want to check out their interview, you can check out the playlist over here.